very good morning, good afternoon, and good evening to all. This is a cheerful day, and more so from the perspective of the equity investors, as we are seeing risk on tones, and so aptly, the title of today's market movers is gold moving lower. We are looking at this possibility of risk on sentiments continuing for a while, at least for a couple of sessions more. And in that backdrop, I feel that given the extended run which we have already seen in the gold might enter into a correction phase and it can start to decline. And this level close to 1650, there is some Fibonacci levels also, and I feel from current overbought scenario, smaller collection of say 4 to 5 percentage point shouldn't be a big trend changer, but still we can try to exploit this possibility if it comes to pass. If you consider today's trading context, the big thing which is there on the data calendar is Bank of Canada's rate decision. But I don't think it is going to be a big event from the market participants' perspective, those who trade in CAD pairs. We are not expecting any change here, and the interest rates, which currently stand at after the emergency move last time, are not likely to change, and even the Bank of Canada's bond buying program is likely to remain as it is. The Bank of Canada has been purchasing the Bank of the Government of Canada securities at the rate of CAD 5 billion per week, and this level is likely to hold for at least a couple of months more, as the things are not likely to improve anytime soon, and because of that, this monetary policy easing will be in place till we see uptick in the economic data. Moving on to the US data, we are scheduled to get ISM non-manufacturing PMI data, and here we are likely to see some improvement as the lockdown measures are being lifted to some extent, not all, but some of the restrictions are being eased, and that opens up the possibility of some of the economic activity restarting again, and because of that, the PMI data for service segment is likely to improve, but still it will be in contraction zone only. That means compared to the prior levels, we are only seeing the contraction happening in the service economy. The only thing is that the extent of contraction is reducing. It's not like that we are seeing full-fledged expansion. That is not happening, not just yet. And on the back of OPEC Plus meeting, we are also scheduled to get these crude oil inventory data for the WTI light crude. And here, as per the expectations, we are likely to see the crude oil inventory addition of around 3 million barrels, and that will be lot less compared to almost 8 million barrels of addition we saw in the prior week. So here, this weekend, the 29th of May, we'll only see the addition, but the extent of inventory addition is going to be lower, and we might see some profit booking. Light crude oil has enjoyed some of the best runs on record in last couple of weeks, and I think given the extended rally, some correction happens, then that shouldn't uh, we can even say that it is going to be a welcome development from bullish traders perspective, as they will get a fresh chance to get involved on the lower side. And this output quota cut is also going to be extended for one more month. So in the near term, the light crude oil remains well supported, and as more and more economies come back on track and start to restart their economies, at least to some extent, we will see the crude oil demand picking up. So in near term, the things are looking up for the crude oil, and let's see how things evolve from here onwards. Now moving to the technical segment, today we will cover the gold XAU in terms of USD, and Nasdaq has almost filled up its gap, we saw this V-shaped recovery. Nasdaq is a now perfect example of V-shaped recovery. We are not expecting that to happen in the real economy, but at least for the tech sector stocks, this has been a clear-cut V-shaped recovery, and now there is a possibility of Nasdaq moving higher and establishing new all-time highs, and that will be an interesting phenomena as other major equity indices are far off from their all-time highs and even recent highs, but Nasdaq, it's all there now. Let's first consider the gold's technical outlook. This is the daily time frame chart and this consolidation phase, which has locked the gold's gains on the upper side, just little below 1750 this time around. Also, in yesterday's session, it had climbed pretty close to 1750, but then the selling pressure again kicked in and pushed the gold prices lower. Even in today's session, after the EDP, the employment data, we are again seeing some fresh selling happening, and I think the near-term outlook is changing to the bearish side here. Also, this consolidation phase. Prior to that, these gains were kind of fast and pretty sharp, and after this level was reached, it has been all sideways. And if we see the gold is entering into a correction phase, then I think the next support zone works out closer to this 38.2% Fibonacci retracement of its rally starting from around 1450 to 1760 on the upper side. So if this correction happens, then I think that will be a welcome development from the long-term traders perspective as well. But these are early days. We are not exactly certain. We are never certain at any point in time, but the possibility is there. But even from short to medium term perspective, which we are more concerned with, I think the near term outlook is shifting on the bearish side, so it will be appropriate for us to change the stance. Only in yesterday's session we were looking at the possibility of gold continuing to move higher, but now things have changed and a day's time is a long time in the trading markets. So we have changed our stance from being on the bullish side to being on the bearish side. So let's see what are the appropriate levels for our entry and the exit purpose. More and more time is if we see gold spending more and more time below this central pivot point, the possibility will get equally stronger for the gold to give up on its earlier bullish stance and enter into a bearish phase, and then the next support zone works out closer to this first support of this month's pivot point series. And I think we can continue to look for any short selling opportunity closer to this central pivot point, which is around 1723. So now as the price action has moved to this lower band of this regression curve, of course the regression curve still stands bent on the upside, but I think the price action is now concentrating on the in the lower band, and that is likely to flatten this regression curve. And if we see a fresh break on the downside, then eventually we will even see regression curve bending on the downside. So that is a possibility which we are trying to exploit to our advantage here. And if we are going to do that, then I think we have to watch out for this 200 SMA area. Even in today's session, in earlier part of Asian trading session, after this corrective move, we were seeing consolidation in this support zone, and this was the crucial support zone. But now, as the European session got underway, we saw fresh breakdown on the lower side, and at one point in time, the level this immediate swing low was looking like that it was going to be breached, but that didn't really happen, and we saw price reversal happening. But now I feel on the upper side it is an excellent opportunity to go for fresh short selling here, and as things are turning bullish for the equity segment, we can expect some profit booking on the gold side. So because of that, and we also have this fresh resistance in place now, as we have this breakdown on the lower side. So this confluence zone of 200 SMA, which are concentrated between 1725 to 1732, are likely to act as a near-term resistance on the upper side. So unless and until there is a break above 1750 or just little above that, we can be surely we can be quite optimistic about this gold trade, and I think any short sale opportunity in the price band of 1720 to 1730 should be welcome with both arms, and our stop loss can work out close to 1740. So for a stop loss of around 15 to 20 points, we can target at the bare minimum. This is the for the retest of 1795. This is the immediate target from the short term perspective, and things if things go well, we might even see continuation of this bearish run. And as we said, on the longer term, from medium to longer term perspective, we are even likely to see the levels close to 1650. So those targets are also in place. But from even short term kind of scalping kind of trading perspective, we have this immediate goal in mind. And as you can see, the risk reward ratio will be quite favorable as well. Now let's consider the equity segment here. The Nasdaq, one of the best performing equity index in whole world, and as I was talking about the perfect V-shaped recovery here, this fall was sharp, and this rise has been equally sharp, if not better. We are seeing this extended run, and after making a low close to 6,600, we are back to little above 9,600. In today's session, we saw even high being made closer to 9,700, and we are not really far off from all-time highs around 9,750. And eventually, I am expecting the Nasdaq to establish fresh highs here, as many of the tech sector companies have benefited in this pandemic outbreak, and these companies have proved to be a backbone of real economy, and the valuations have risen accordingly. So here that is being reflected, and the Nasdaq, which is dominated by the tech sector stock, is on its path to establishing new all-time highs here, and it's only a matter of time, or you can say days, before we see that happening. Now if it is going to continue to rise for at least some more days, then I think, of course, naturally for us the job is to find good trading opportunities to get involved. The entry and exit points are of course always crucial for us to increase the possibility of ending up making money. So here the price action is concentrated in the bullish zone. It is above this central pivot point, which is now left far behind around 9,250. So that's a distance of almost 5 percentage point from the current valuation. And on the upper side, we don't really have a resistance in sight either. The next resistance, the R1, stands at 9,937. That is just a little below 10,000 zone, which is going to be a next milestone for the Nasdaq to crack. And here the all-time zone is also pretty close, and not to say the regression curve has been on sharp upward momentum, and here the price action has kept pushing it higher. Now the price action is concentrating closer to this middle band, and bias remains on the bullish side. But making money in this upward momentum is not that easy, as we have seen sharp moves on both sides. So it is easier to see but difficult to trade, and even in today's session, it is going to be fairly difficult to pinpoint the entry and the exact exit points. But nonetheless, we always have some levels to keep in mind, and as in yesterday's session, This reversal happened closer to this trend line support, and even in today's session we have trend line support in vicinity of 9550, but that is not exactly close, that is more than 1 percentage point away, and the Nasdaq at the moment is trading close to its 9700 zone. So here getting involved for a fresh trade is a difficult job. I wouldn't suggest going for a short sale, not just yet. If we see more of an consolidation, and if the momentum wanes, and we see gains becoming incremental, and the price action tends to remain sideways, then at that point in time we can try to exploit the overbought situation, but that is still at least couple of sessions away. So even in today's session, I would suggest that any trading opportunity, just little bit of correction and then consolidation. Anything above 9550, just little above this 100 SMA zone, can be lapped up for the opportunity to go long. But as I said, the consolidation is going to be key here, and if we see the price momentum breaking below this zone, and even passing below this 200 SMA zone, which is around 9500, then I think we will need to adopt a cautious tone. But right now we don't have to worry about that. Even now the momentum remains on the bullish side, and it will be prudent for us to exploit that situation. But as I said, it's easier said than done. So we will need a correction of say almost around 70, 80 to 100 points, and then do consolidation, and then it shouldn't even break below this crucial marker. In only that scenario we will be able to go long in the Nasdaq. So let's see if we get that opportunity or not. But I would like to reiterate again that it's not really advisable to go for a short sale just yet, and hold your breath, and maybe the moment will arise, and when it arrives it will be our job, you can say, as a trader, to try to exploit that situation to our advantage. Now that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. See you tomorrow. Have a fabulous day ahead. Goodbye.